AI is reshaping the global economy faster than any tech before it, and the top trend no one expected is about to blow your mind. Stay tuned, because number one reveals a secret most governments are still hiding. Imagine a world where anyone can start investing with a few taps powered by AI, turning spare change into a diversified portfolio in real time. These platforms analyze market sentiment, risk tolerance, and personal goals to auto-adjust allocations, making sophisticated strategies accessible to the masses. By learning from millions of transactions, they continuously refine models, offering lower fees than traditional brokers. Early adopters report higher engagement and faster wealth accumulation, especially in emerging markets where banking infrastructure is limited. As the technology matures, we'll likely see regulators adapting to this new paradigm, and the next trend on our list takes the automation even deeper.
Surprisingly, synthetic data is becoming the backbone of AI-driven market forecasts, allowing firms to train models without exposing real customer information. By replicating complex economic patterns, these generated datasets fill gaps where historical data is sparse or biased. Companies can simulate rare events, like sudden policy shifts or pandemic spikes, to stress test strategies, improving resilience. Researchers claim that synthetic data can reduce model bias by up to 30%, though the exact impact varies by industry. While privacy advocates applaud the reduced reliance on personal records, some skeptics warn about over-reliance on artificial scenarios. Up next, we'll see how AI is reshaping the very places we work.
According to recent surveys, AI-enhanced remote work tools have boosted productivity by an estimated 15% across global enterprises. Intelligent scheduling assistants auto-arrange meetings across time zones, while real-time transcription and sentiment analysis gauge team morale. Cloud-based AI also optimizes bandwidth, delivering seamless video even on limited connections. Companies report lower overhead costs and broader talent pools, but they must navigate new cybersecurity challenges as AI monitors more data streams. The next frontier pushes automation into physical logistics, as autonomous robots take over supply chain tasks.
Hidden within sprawling distribution centers, autonomous robots are now orchestrating inventory with laser precision, cutting order fulfillment times by roughly 40%. These machines use computer vision and reinforcement learning to navigate dynamic environments, handling everything from pallet stacking to last-mile sorting. By communicating with AI-driven demand forecasts, they pre-position goods before orders even arrive, slashing waste and storage costs. Some analysts estimate that fully automated warehouses could reduce operational expenses by up to a third, though the transition requires significant capital investment. Looking ahead, the race intensifies as quantum-ready algorithms promise to turbocharge these systems.
Few researchers know that the marriage of quantum computing and AI is already influencing economic modeling, offering exponential speed UPS for optimization problems. Early-stage quantum-ready algorithms can evaluate countless market scenarios simultaneously, potentially redefining risk assessment and portfolio construction. While practical, large-scale quantum machines remain scarce, cloud-based quantum services let innovators test prototypes today. Estimates suggest that once fully mature, these hybrid models could shave days off complex simulations, accelerating decision-making for governments and corporations alike. The subsequent trend shifts focus to how AI personalizes the tax landscape for individuals and businesses.
Rapidly evolving tax software now leverages AI to tailor deductions and credits to each taxpayer's unique profile, scanning everything from receipts to digital footprints. By cross-referencing public datasets, the systems identify overlooked savings, potentially increasing refunds by an estimated 8 to 12%. They also predict audit risk, guiding users toward compliant filing strategies. While privacy advocates urge strict data handling standards, many fiscal agencies are piloting AI-assisted audits to detect fraud more efficiently. As personalization deepens, we'll see decentralized AI marketplaces emerging to democratize access to these sophisticated tools.
Innovators are building decentralized platforms where AI models and data can be bought, sold, or shared without a central authority. Powered by blockchain, These marketplaces ensure provenance, transparent pricing, and immutable licensing, fostering competition and reducing entry barriers for small firms. Participants can monetize niche data sets, like regional energy usage or agricultural yields, unlocking new revenue streams and spurring localized AI solutions. Early reports suggest that such ecosystems could accelerate AI adoption in underserved economies, though regulatory clarity remains a work in progress. Next, we explore how AI is being harnessed to protect assets against climate-related financial risks.
Data scientists are deploying AI to model climate-induced hazards with unprecedented granularity, enabling insurers to price policies more accurately for floods, wildfires, and extreme heat events. By ingesting satellite imagery, sensor feeds, and historical loss records, these algorithms forecast risk at the neighborhood level, potentially lowering premiums for low-risk zones while encouraging resilience investments. Some pilots report a 20% reduction in claim processing time, though skeptics caution about over-reliance on models that may miss rare, high-impact events. The following trend brings AI directly into the creative economy, reshaping how products are designed and sold.
Experts say generative AI is revolutionizing product design and marketing, allowing brands to generate custom visuals, copy, and even 3D models at the click of a button. Retailers can instantly prototype thousands of variations, testing consumer response through AI-driven sentiment analysis before any physical inventory is produced. This reduces waste, shortens time to market, and opens hyper-personalized shopping experiences. While some creators fear displacement, many embrace the technology as a collaborative partner that expands creative possibilities. Finally, we arrive at the most ambitious trend reshaping national wealth accounting.
Finally, governments worldwide are piloting AI-integrated wealth tracking systems that compile real-time data on assets, debts, and productivity across every sector. By linking tax records, satellite imagery, and corporate filings, these dashboards provide a living picture of national prosperity, helping policymakers fine-tune fiscal measures with unprecedented agility. Early adopters report more accurate GDP estimates and faster response to economic shocks, though concerns about privacy and data sovereignty persist. This holistic view promises to democratize economic insight, allowing citizens and investors alike to gauge the health of their economies with a clarity never before possible.
We just explored 10 powerful ways AI is quietly rewriting the rules of wealth and productivity, from micro-investing bots to nationwide data dashboards. If you want to stay ahead of the next economic wave, hit subscribe so you never miss a future-focused list like this one. Which of these AI trends do you think will dominate the next decade? Let me know in the comments below, and give this video a like if you found it eye-opening. Thanks for watching, and see you in the next deep dive.